Open your banking app right now. Look at your balance. You think that money belongs to you. You think it's safely sitting in a vault, protected by the government's FDIC insurance. You are entirely wrong. Buried deep inside a federal law passed over a decade ago is a dormant legal mechanism designed for one terrifying purpose: to allow your bank to legally confiscate your life savings to save itself from bankruptcy. They don't call it theft. They call it a bail-in. And while the media distracts you with politics and inflation, the banking elite are quietly preparing the system to use it against you. Today, we are exposing the Great Confiscation. We are going to show you the exact legal loophole that transforms you from a protected depositor into an unsecured creditor destined to lose everything. If you want to survive the engineered collapse of the financial system, you need to understand the trap you are currently sitting in. Welcome to Global System Shift. For nearly a century, the American citizen has been told that the FDIC, the Federal Deposit Insurance Corporation, is the unbreakable shield. You believe that your deposits are insured up to $250,000 and that the government will bail out your bank if it fails. You have been lied to. The rules changed after 2008. The bailout model, where taxpayers rescued the banks, is gone. It was too politically unpopular. The financial elite needed a new solution. So, they implemented the Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010. Buried deep within Title II of that act is the Orderly Liquidation Authority. Orderly liquidation doesn't mean the government writes a check to save your bank. It means the bank is authorized to restructure its debt internally. And here is the fact they do not want you to know. In that restructure, legally, you are not a depositor. You are a depositor only as long as the bank is open and healthy. The exact moment the bank enters orderly liquidation, you are redefined. You are legally classified as an unsecured creditor. When a business goes bankrupt, there is a hierarchy of who gets paid back first. Secured creditors, like the megabanks and bondholders who hold collateral, are first in line. Then come administrative costs, taxes, and employees. At the absolute bottom of that pyramid, just above the common shareholders, are the unsecured creditors. That is you. When your bank becomes insolvent, the Dodd-Frank Title II mechanism permits the bank, under the supervision of the FDIC, to seize your deposits and convert them into new common stock in the newly restructured good bank. They won't call it a confiscation. They will call it a mandatory debt-for-equity swap. Your cash in the bank, which you thought was as good as physical currency, will vanish. You will be left with digital stock certificates in a failing bank that no one wants to buy. Your life savings will become worthless paper, and they have the legal permission to do it. They don't need to pass a new law to make this happen. The template has already been tested on the public. In March 2013, the banking system of Cyprus collapsed. The European Central Bank and the IMF mandated a bail-in as a condition for the bailout. For depositors in the two largest banks, the government froze the exits, just like we analyzed in our last video, and then proceeded to take up to 47.5% of deposits over 100,000 euros. Imagine your family has $45,000 in savings, meticulously built over years of hard work. You go to bed one Friday night believing you are safe. On Monday morning, you log into your banking app and see that your balance is $23,000. You didn't spend it. You weren't hacked. Your bank just took it to save itself, with absolutely zero due process. They translated that unsecured creditor label into a mandatory confiscation of citizen wealth. This is why they are freezing the exits right now. This connects everything we've been discussing on this channel. Operation Lock-In wasn't about national security. It was about liquidity capture. The Federal Reserve, the Treasury, and the systemic banks need your trapped dollars inside the digital system, available for confiscation. Because they know the $38 trillion national debt bubble is unpayable. They know a currency crisis is mathematically inevitable, and they need your savings to be the collateral to absorb the losses of their reckless gambling. But let's address the final illusion. I can hear people saying, but the FDIC will step in. Dodd-Frank Title II says they can use bail-in, but only if the FDIC insurance fund is insufficient. My money is under $250,000, so I'm totally safe. No, you are not. The FDIC currently holds a deposit insurance fund that covers roughly 1.3% of all total insured deposits in the United States. That's like having an insurance policy for your home that only has enough cash to replace one window if the entire house burns down. In the event of a systemic, multi-bank crisis, the exact kind of crisis that would trigger the orderly liquidation authority, the FDIC fund would be mathematically vaporized in the first 48 hours. The Dodd-Frank mechanism explicitly lists depositor bail-in as a core tool to be used when the FDIC fund is inadequate. They aren't going to bail you in as a first resort. They are going to bail you in when they fail as a last resort. And history proves they always fail. The financial world you knew yesterday is gone. The central banks have already made their move by hoarding physical gold outside the system. They have trapped your dollars inside. And now you understand the legal mechanism they are preparing to use to complete the final wealth capture. The silent shift is complete. They have abandoned the dollar, and they expect you to hold the worthless bag of equity they will force upon you. The time for diversification into digital permission slips is over. You must think like a central bank. If they need your cash inside, you must own the assets that are outside. You must own assets that require zero permission to hold and zero permission to use. You must own assets that cannot be bailed in. Let me know in the comments below. Did you know about Dodd-Frank Title II and the bail-in mechanism before watching this video? Or did you truly believe the FDIC insurance was an absolute, ironclad guarantee? Are you still holding your life savings in one of the major systemic banks, like Chase, Wells Fargo, or Bank of America? Or have you followed the data and diversified into physical assets, different jurisdictions, or self-custody Bitcoin? In our next video, I'll detail the precise legislative steps being prepared to introduce the ultimate mechanism of control, the mandatory digital dollar conversion tax, how they plan to force the final shift by making the old paper dollar mathematically impossible to hold without a penalty. You must understand this final trap before the gates are permanently closed. Subscribe to Global System Shift. I am seeing the future of power, and I am telling you now, everything is about to change. Prepare accordingly.